Today's Monday, February the 3rd, and we might as well start off with what we knew was going to happen. With this severely oversold, it was bound to be up today. I'm pretty sure that's what I said on Saturday morning when I recorded Friday's video. Advancers led to decliners in the global, all of the stocks. However, the ones that the oscillator looks at, advances and decliners, 2,000 to 1,000, so about 2 to 1, which is roughly what the overall market was saying as well. We had the Dow scream up at the beginning, and the NASDAQ and the S&P 500, and then pull back and just level off. But volume, good volume, so there's still a lot of commitment to whatever is happening, buying or selling. The key thing is that the market oscillator now needs to continue to move up back to the neutral line. If it should fall back down, it really could tumble a lot. The coronavirus thing isn't over yet, right? There's how many deaths? 400 or something? But it's still pretty much contained to China. So let's see when the coronavirus starts popping up in the United States and Europe. That'll be interesting. The S&P had this rebound. However, we did finish off of the highs, as you saw in the earlier chart. So we're still heading for support at the cloud, and that will be important. But look at the Chiku span. The Chiku span did something that we've come to expect, which is it bounced right off of this candle on Friday. We didn't point that out on Friday, but it was right at that candle, bounced off of that. Now support tomorrow is going to come in at right here, 3240. 3240 is where we're going to see support. So let's put that right there. Let's put an alert at 3239.51, and that will be when the Chiku span is at the top of this candle. If it goes below, it has the 8 EMA to support it, and then we'll see what happens if it fails there. Apple down $2, but that's a 14.6% Fibonacci retrace. Now that's not an important Fibonacci, but nonetheless it is a Fibonacci number, and there were some buyers waiting at that point. Volume was in line with the market, was quite consistent. Amazon down $5. What's concerning here is that it finished off where it started right after earnings. I mean, that's still very strong, and the 3 contracts that I have are in no jeopardy of losing money because they're 1900s and 1910s. So I'm just waiting another 18 days for all of the theta to expire. Caterpillar, remember we talked on Friday about this trend line. This trend line, which has been important before, actually started back in January of last year, had 2 more hits, that was 18 rather, 2 years ago, 2 more hits in 2018, 1 definitive hit in July of 2019, and then we broke through, but now we've come down to where? To that trend line, and we ended right there today. So that's what we're going to watch tomorrow. Is that trend line important? Do traders see support there? But look at the cloud. The cloud up ahead is not good, and look at the volume. 2 days where institutional and the big boys were playing and drove the volume above the 20-day moving average. So Caterpillar, which really has nothing going for it now that its dividend is in the bag, ex-dividend, and its earnings have been are through. Really, there's nothing left to buoy this stock up. So Home Depot, however, up $3. That's pretty strong. I bought more Shopify, so I've doubled my position in Shopify now. I have 6 contracts, and we had this little above the middle doji. We're heading towards February 12th earnings, but the nice thing is that we had this support of 138.2%, which has been consistent once, twice, rejected here, and then support here. So a follow through tomorrow would be nice and would confirm that I did the right thing by doubling my position with those contracts. The contracts that I have are the March 20th 490 calls, which I purchased, and the 500 calls, which I sold. The first batch were for $4, and this batch cost me $3.50. AT&T, big drop, and that would be cloud resistance at one point today. Volume in line with the 20-day moving average. So that was disappointing. I don't know what the news was in AT&T because it had its earnings shock right here and looked like it was going to take that 200-day moving average support and continue to move up through the cloud. But the flat cloud was attractive, and there were sellers waiting just below the cloud. The Chiku span below the cloud, let's keep an eye on it because we have an opportunity for the Chiku span to break through this thin portion of the cloud. But if it does that, it's still going to run into this amount of resistance in the cloud. So we've got some ways to go before AT&T returns any profits to us. Whirlpool only up today 98 cents, but still managed to stay within the cloud. And the Chiku span is down here somewhere, so in the middle of that candle. So that's inconclusive. Google was the big one today, and Google had earnings after the bell. And let's see what happened. So if we go into extended data, Google did actually finish up slightly. So that's good, but we weren't following it anyways. So it's right now it's at 1484, and it closed the day at 1413. So it's up a little bit, but it's not hitting any new records. So that's it for today. Where are we going tomorrow? This wasn't a very convincing bounce. It was a bounce that was called for by the market oscillator. And tomorrow we'll determine if we're going to go back up and test that neutral line, or if we're going to go back in the oversold territory with concerns about the coronavirus.